Good day. My name is Timulucho Nkopela, and I'll be explaining to you the concept of depreciation as well as doing an straight line method example. Let's get straight into it.
Right, so let us dive straight into what is depreciation. So, a depreciation is an accounting concept of allocating the cost of a tangible asset over its useful life to account for declines in value over time. So basically, that statement says that as soon as we purchase an asset, right, its value just suddenly decreases from the time that where it's available for use to us, whether that be tomorrow, the next year. So as soon as it's available for use to us, its value decreases. So basically, depreciation is an estimated expense that we calculate to allocate for that decrease in value over a period of time to that asset because assets decrease in value. So this applies to all assets except land because land cannot be completely used up. I can purchase land today, build warehouses and apartments, tear down those warehouses and apartments, and then I'll still have the land because land will not be completely used up. So now let's go to why do we depreciate? So now that we've answered what is depreciation, let's talk about why do we depreciate. So the purpose of depreciation is to reflect the real value of the asset each year in an entity's financial books by calculating its loss of value. So basically, when we purchase an asset in the beginning of the year, right? We purchase an asset, it costs a certain amount of money. But at the end of the year, it doesn't. It's not. Its value is not the same amount that we purchased it for. So the purpose of depreciation is to reflect the true value of the asset at the end of each year in the asset section in the statement of financial position. This is because we want to reflect the true value and true amounts in our statement of financial position that includes our assets and our liabilities. So depreciation basically helps us to calculate the loss in value of the asset so we can show the true value of the asset at the end of the financial year. Okay, so when do we calculate depreciation? So we start as soon as the asset is available for use and all the way until the asset is disposed or we exchange it for another asset or we sell the asset or it's completely used up. And available for use is when the asset is been brought into its location where it's going to be used or in a condition that it can be used. So we start at that date when those criteria are met. And we also calculate depreciation each year. Um, and we record the net value of the asset in the statement of financial position at the end of the financial year. And we can also calculate depreciation on a monthly basis as well. So how do we depreciate? We can use a straight line method, and it's basically when the depreciation expense is the same every single year until we completely use the asset or we get rid of it. And but it will be the same for a completed 12-month period. What am I saying is that if it's the same for every completed 12-month period, if we purchase the asset in the middle of the year or we sell it in the middle of the year, we'll have to divide that year depreciation by 12 and multiply by the amount of months that we have the asset. So, so instead, in our example here, we purchased an asset for $95,000 in January 2022, and we expect to use it for the next 10 years. Let's assume that um our year end is 31 December 2022. So the first step is to divide the cost of the asset, which is 95,000, by 10 to get $9,500 as the depreciation expense for the year ended 2022. That'll be depreciation at the end of the year. So how do we treat this transaction and how do we record it? So depreciation is expense and expenses increase on the debit side of the general journal when they're increasing. And we know that depreciation is increasing in the year 2022. So we record it on the debit side of the general journal. So what is its corresponding credit entry? So the corresponding credit entry, the narration is the accumulated depreciation. And we basically use this as account to credit the asset or otherwise to reduce the asset so that in the statement of financial position or the balance sheet, we can show the net asset value of the machine. And we use accumulated depreciation because depreciation is an expense and there are no expenses in the balance sheet. So we have to create an account that is known as accumulated depreciation that will be used to credit the asset and therefore show us what is the true value or the net asset value of the machine at the end of the year.